India's markets news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Thursday morning, once again from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Reema. Guys, hi. Morning.
Hi. Good morning,
Hi,
Prashant. Good morning, Reema. Well, record highs continue for the market. No problems at all. In fact, even global cues have now, once again, after a couple of days, become stable. So looks like we have good tidings on our hand.
Absolutely. The dream run continues.
Absolutely. It's a bit in the clouds and really, right? And, it's been a great week. And the consolidative price action from last week is behind us. And we're looking at a pretty good sort of session all in all. Last few sessions all in all. Monday, for example, big recovery from the lows. Tuesday, a follow through. Yesterday, of course, was once again a much more sturdier market because it was not just led by one sector like Tuesday, which was all pure financials. So, let's just sort of start by putting some of these things on the table. As I said, great run. Yesterday, it was a mix of names like Reliance, Telecom, and banks. If you wanted to break up yesterday's 0.5% gain on the Nifty, it largely was split evenly between Reliance on one end, about 80 points, and then you had a Bharti and an ICICI Bank contributing to the rest of it. So not just financials, but a little broadened out. I just want to put out one number before I get into levels and global stuff, etc. I looked at the positioning, FII positioning now, and it's just a question at this stage. Are we now starting to get to a bit of an extreme zone? And let me explain. Before the budget, going into the budget, FIIs were net short, some 3.3 lakh contracts. Of course, all of that, what happened. And we were talking about how, from those levels, if things turn out well, you actually get to the other extreme. And now the question is, are we at that extreme? So as of yesterday's close, FIIs are now net long over 2 lakh contracts in index futures. Now, we've been higher, but I said this yesterday in the afternoon as well, later half as well. You're getting to a point where it perhaps is getting to that zone where you start to wonder whether too much optimism is built in on one side. And that's how these things work. They won't tell you an exact way to kind of predict what markets do, but shorts in the system provide comfort, and there aren't any. And it's sort of the market is getting one-sided consensus long. That's essentially the data point. Now, overnight cues, having said that, is positive. Nasdaq was up 0.5%. So, AI-led optimism. Amazon was the mover yesterday, 3.5% gains on the stock. You have yields, bond yields, which were up about 7 basis points. Dollar index was up 0.5%. So, you want dollar index lower, yields lower, not higher, but well, we got a bit of a move that we've seen. Oil prices unchanged at about $85 per barrel mark. You had one data point, macro data point, which is the U.S. housing data, which showed that it is slowing down. So so new home sales month on month were down 11%, but the prior month numbers were revised upwards. So it's nuanced, but the fact is, at a broad level, you can very confidently say that housing is slowing, and that's a very large sort of part of the U.S. economy. Later today, we'll have a sort of one-on-one face-off between President Biden and presidential hopeful Donald Trump, ex-President Trump, and that's going to be moderated by CNN. We'll get to hear. It's early. I mean, elections are in November, and maybe it's just too early to start to trade the elections one way or the other. But, you'll get a first indication of what it means. For markets, it's going to be China, it's going to be trade, right? I mean, ex-President Trump on his campaign road has said he'll take import tariffs to 60% for Chinese imports, right? Now, of course, could be rhetoric, but we'll get more details tonight. Just to sort of circle back the levels on the Nifty, the target is, and it's the same, the Bollinger Band, which is now expanded a little bit higher to about 24,162. That is the first level which the market on the Nifty will get to. On the way down, it needs to defend the 40-hourly exponential average, which stands at 23,618. Upside level for the Nifty Bank stands at 53,468. That's the level which we need to get to. 0.5% gain yesterday on the Nifty Bank as well. And on the way down, supports come in at the hourly averages. The 20 is the 52,279 level, which should not break. And below that, you got the 40, which is 51,885. The GIFT Nifty will come up on your screen, give you a sense of how the open is going to be. I mean, even yesterday we had a 30-odd point lower start. It's a little larger with a 56-point start. Remember, if you're trading very short term, you've got to pay attention to a dollar which is higher, yields which are higher, and of course the fact that the market's added on about 350 odd points in the last 3 trading sessions, and that keep that point about sort of, one-sided trade sometimes in the very near term tends to get pushed back. So keep those things in mind. But it's a very, very vibrant market. Single stock action. I've not even spoken about that. We'll do that with our guests later on. There is enough action happening in the market, even on days when the index takes a bit of a break. Sonia.
Oh, absolutely. I mean, there is no complaints at all that the bulls have about this market, right? We're putting an end to a series which has been so strong for the market. I mean, the Nifty is up 6% in this series. The Bank Nifty is up 9% in this series. So it's really been a very, very strong run that this market has had in the last many days and weeks. So record highs continue for the Nifty. In fact, in the past 6 months, if you map the trajectory, it's been almost a 10.5% rise that this market has seen. And, I was just looking at the data in the last 4 years. I mean, from the lows that we saw in COVID time from April 2020, if you just look at the chart of the Nifty, I mean, I don't know if we can pull up a 4-year chart, there is no major correction that we've seen. It's been a one-way street. All the dips have gotten bought. It's higher highs for the market. So it's been phenomenal, really, the progress that we've seen in the market in the last many weeks and months. As I said, okay, there you have it. That's a 12-month chart, by the way. Almost a 30% gain is what this market has seen. As I said, the Nifty is up 6% and the Nifty Bank is up 9% this series. FI net long contracts are also at a 6-month high. Yesterday, you had Reliance that showed leadership in the market. So there was a 100-point contribution from just Reliance yesterday. So let's see whether that one participates in trade and assumes further leadership over the next couple of days. The global cues were largely stable overnight. No problems over there. There was large buying from domestic institutions in our market overnight, so keep that on your radar. DIs have bought 5,100 crores in the cash markets, while FIIs have sold about 3,500 crores or so. But overall, you'd have to say it is banks that are performing. There is a lot of talk of consolidation in the cement sector, so that space could be in focus today and over the course of the next couple of days. And of course, you have contributors from the likes of Reliance. So there's no problems for the market. It's something we call a purple patch, right?
Yeah.
Where everything that has to go right goes right for the market and momentum just picks up. I think that's the way things are progressing.
I think the only concern that, all the speakers we chat with say that it's just gone up too much, right?
Yeah.
Like, how can it keep going up? And I think that's the overarching concern and not so much on the macros or fundamentals. But that said, talking about the near term right now, the Asian markets are a bit shaky. So you've got the Hang Seng, which is down 1.5%. Nikkei is down close to about 1%. The Taiwanese markets are down 0.5%. Across the board, the Asia-Pacific region is in the red and firmly in the red. And the big story emanating out of Asia is the yen has hit a 38-year low against the dollar. It's broken past that 160 mark. It had breached it even 2 months ago, and at that time, the Central Bank of Japan had intervened. So the question now is, will the Central Bank intervene once again? But 160 is a big level that even the Japanese Central Bank watches very closely. Because of that, we've seen the dollar index rise to the highest level since November. So that's not good news for, the Indian metal sector, for instance, in India. The GIFT Nifty is also suggesting a bit of a, weakness to begin trade with, maybe borrowing the cues from Asia this morning. A quick word on the big events to watch for the day. One, it's the June series expiry. It's the Thursday, it's month end. So the June series expiry. A big one will be the SEBI board meet. And the chief, Madhvi Puri Buch, will be addressing the media at 6 p.m. And what we've learned from the agenda is that SEBI is likely to tighten the rules for stocks to be eligible for derivatives trading. They will ask brokers and mutual funds to stop enlisting unregistered financial influencers for their marketing campaign. The board could also consider changes to delisting rules to make it easier for companies to exit from the stock exchanges. So keep your eye on the SEBI board meet. We will, of course, be on top of it. The press conference is scheduled at 6 p.m. when Madhvi Puri Buch will, address the media. So that's, one of the big events to track. Apart from that, globally, on the U.S. front, the U.S. GDP growth rate, Q1, and even the initial jobless claims, and then the presidential debate. In India, board meetings of RBL Bank and AU Small Finance Bank, where they will consider a fundraise. the Raymond AGM, where the shareholders will decide on whether Gautam Singhania gets reappointed as the chairman and managing director. For Z Entertainment, it's the last day for F&O trading. There is also the Nifty quarterly rebalancing today. But what we've picked up is not expected to have a big significant impact. And finally, not to forget, the India-England T20 semi-final is scheduled at 8 p.m. So all eyes are going to be on that.
Okay, a lot of market and sporting action. So let's get cracking with the day. On the equities front, first up, we have Lawrence Blanco of CLSA, who says that in absolute terms, the NSE Banks Index is extending its uptrend. The Nifty is now within striking distance of 23,740 to 23,750 upside target projected from April-May trading range. Despite this and the lack of a new momentum confirmation, he is giving benefit of doubt to the upside as long as price action holds above the 50 DMA, which coincides with the upper boundary of the April-May trading range of 22,270 to 22,780.
Lawrence Blanco is also closely monitoring HDFC Bank, as the stock appears to be on the verge of breaking out of the trading range that has been in place since the beginning of 2021. The range is defined by resistance at 1,717 to 1,734 and support levels down at 1,240 to 1,245. A close above the resistance levels would mark a major bullish event for HDFC Bank, ending a period of 2 years of ranging price action. This breakout would suggest an upside target of 2,373, representing a potential upside of 35 to 38%.
Okay, let's also get you some money market views, shall we? On the rupee front, Parul Mittal Sinha of Standard Chartered says a stronger dollar, higher demand from oil importers and forex demand due to future expiry drove the dollar INR higher. FPI inflows due to India's inclusion in a major global bond index is likely to provide some cushion over the next few days. However, she expects the dollar to remain strong in the coming days and the dollar INR pair to trade in an 83.30 to 83.80 range in the very near term.
On the bonds, she says the Indian government bonds remain range-bound this week, but saw selling by local participants as they lightened their positions ahead of the inclusion in the bond index this week. The overnight index swap moved higher on statements made by the RBI governor on likelihood of strong growth in FY25 and the headline CPI now not declining towards 4% on a durable basis. She expects the 10-year benchmark yield to trade in a range of 6.95 to 7.05% in the near term.
Okay, well, those are all the cues that you need to watch out for as we head into a brand new day of trade. But